money.
Yep, you hear that money. A little bit about money. And today I'm going to talk about my arena in the mortgage world. If you didn't know, that's what I do for my full-time career is I'm a mortgage expert. And that's why you never hear anything about mortgage except from me is because that's what I do. And I have a lot of information and advice that I can provide you in that arena, doing it for 20 years. And there's a list of questions that you really want to make sure that you know to ask a mortgage professional. And like anything else, when you're searching for an expert, you want to talk with a lot of different people and find that person that's going to connect with you. Even if you find someone that's an industry leader, it may not be the right fit for you, and that's totally okay. But how do you know if you're working with an industry leader? How do you know if you're working with somebody that can get you through that process? Because there's a lot to know and a lot to do in the mortgage arena. So I want to give you some questions to take down. Is there a cost for pre-approval? Definitely you don't want to pay anything up front. It's a time for you, again, to go through the interviewing process to see if that's someone that you want to move forward and work with. And the pre-approval shouldn't cost anything. There should be no financial commitment or no commitment to move forward with a loan if you choose not to. You want to make sure that that consultation that you're having is a pre-approval and it's not a pre-qualification. If it's a pre-qualification, they're telling you they don't want to waste time until you have some type of commitment that you're going to move forward and work with them, because a pre-qualification is just an estimate. You can get generated a nice, pretty letter that says you've been pre-qualified to purchase a home for a particular price. But when you get out into the market and you're working with like my real estate expert that I have here in studio today, Aaron, he will tell you, and any other real estate agent will tell you out there, that you cannot make an offer in this environment, especially with a pre-qualification letter. You need a pre-approval letter. So the difference is a pre-approval letter is a solid loan commitment. Now, I do want to caution you on what a solid loan commitment means. A solid loan commitment means it's based on the information that you provided at application. So I caution you as you're making any changes throughout the process, before you do that, you've got to check with your mortgage consultant first. And it seems like it's common sense, but, you know, things get busy. You don't think about it. You've got this nice, pretty letter that says you're pre-approved. If you're making income, employment changes, debt, asset, anything that's regarding money, check with your mortgage consultant first and get that letter updated based on the new information. Pre-approval letter, you also want to make sure that there's a guarantee in there in your closing. And I say that it needs to be in the pre-approval letter is because the pre-approval letter is kind of like your mortgage trophy. It's what you're going in a multiple offer scenario. It's going to be attached to the contract, and it's going to show the strength of your offer. The verbiage that's in the pre-approval that says employment, income, liabilities, everything has been verified and is subject to appraisal and title, because all of that stuff has been verified. So unless you've actually changed it, your approval cannot change based on that. So the verbiage is important. Have the seller, the guarantee on your closing date right in the letter as well, because when the listing agent that represents the seller is looking at that, and the seller themselves, it shows strength with the mortgage consultant and the company that you're working with. I say $1,000 is a good guarantee to have and expect from your mortgage lender. When do you lock in your interest rate? Have the conversation with your mortgage consultant. Ask them how the market works, because how they answer that question, it's going to give you an indicator if they even know, because I'll tell you there's a large percentage of mortgage consultants out there that can't even tell you how the interest rates work and what the adjustments are, or how they move and how they're affected. You hear a lot, it's based on the 10-year Treasury, which actually is not correct. It's based on the 30-year Fannie Mae 30-year bond, and how it affects interest rates are directly tied to that. When the bond market is trading at a higher amount, the interest rates are going down. When the bond is losing, the 30-year Fannie Mae bond is losing in trading, the interest rates are going to go up. Usually it's the exact opposite of the stock market, not always. But bottom line is, I will tell you here as a mortgage expert, any expert out there, including myself, is going to be right 50% of the time. Yes, I said 50% of the time. I can't tell you where the interest rates are going to go. Nobody can. And we've all predicted that they're going to go down, and look what's happened. They really have, or that we predicted that they're going to go up. Look what's happened. They really haven't gone up at all. Little spurts here and there. But anyone that can tell you that they're going to predict what the market is going to do is not an accurate situation, because they can't. Now, ask about locking in and when you have the opportunity to do that, because what I feel is best for you to do, and again, I'm just encouraging as a mortgage expert and what I believe in personally myself, when you're in a position to lock in your interest rates, you're within 30, 60 days of closing, lock your interest rate in. And here's why, because you can't predict what the market's going to do. Historically, you don't see big drops in the market in interest rates within a particular period of time. Now, have we seen it happen? Of course we have. But you've got a one-time renegotiation. So your lender should be able to renegotiate and get you a better interest rate. If that's not something that they do, then you need to talk with someone else, because not being locked in and at risk of what the rates are going to do is a high risk to be at. So have that conversation with your mortgage consultant. Also ask the question about loan options. The worst thing you can do is see one loan option compared for you. Look at a comparison of options. You should be seeing at least 3 options side by side. Maybe 4, maybe 5. It just depends on what your financial situation is. But if you're a lower down payment scenario, you want to make sure that you're seeing 0 down loan options and grants, because yes, there's free grants out there you don't have to pay back, depending on where your income's at. But anywhere in our area here, $97,000 a year. So if you're listening right now and you make $97,000 or less a year, there is a grant program available for you. You do not have to be a first-time home buyer. Low credit score qualification. So if you're not hearing about that, you need to call into the show, because you're not seeing all of your options. Compare it with a standard FHA 3.5% down payment, and look at it compared to conventional financing if you have the qualifying credit score for that. The worst thing you can do is get into a loan and not understand that you actually had options. And even if you are in the best loan, how do you know that if you haven't looked at your options? And you're going to have a cosigner, you'll have a coworker come up to you, or a neighbor come up to you and talk about the loan program that they got and how awesome it was. And let me give you an example. Someone comes up to you and says, hey, I got an FHA loan. It just closed a little while ago at a 3.875% interest rate. And you're going, wow. I have a conventional loan and it closed at 4.25% interest rate. I needed a 5% down versus a 3.5%. What did I do wrong? Well, let me tell you, the conventional 5% down payment loan option was a better option, because even though the rate's higher, the cost of mortgage insurance is so much lower. But don't you want to have that confidence in being able to know that you've looked and analyzed all your loan options? So it's a really important to look at all of your options. Do they have in-house underwriting? Find out where the underwriting is taking place. Not to say that that's evidence that they have in that process for securing your loan is a really good thing. I did also mention, as far as the guarantee on your closing, and I say that should be based on a 30-day calendar close. So your guarantee should be based on a 30-day calendar close. It doesn't mean that they can't close sooner than that, but that's what your guarantee should be based on. And I'm telling you, you need to ask them how long they've been in the industry. I thank all of my clients 20 years ago that worked with me in the first 5 years of my business. I really, really do. And I think I kind of made it through it, but I don't know how. My first 2 years in the industry, I have no idea how I made it through. This is really, really hard without having that experience. So ask the question. It's up to you if you want to work with somebody that doesn't have a 5-year experience in the industry, and you can make that decision, obviously, but at least you come equipped and know that they're not as experienced and might be new in the industry, and you can go prepared with that. So those are questions. Don't have time to go through any more because I need to take us to break. But if you have any questions, again, please feel free to call my show at 1-855-400-1150. As your mortgage expert, I'm here to help you in any way that I can. Coming up next on the Money Hour, are you a business owner? If you are, have you ever asked yourself, how can I ignite my life and my business? Well, you definitely want to stick around for my conversation with Deborah Trapin, founder of D11 Consulting, right here on 1150 AM KKNW after the short break.